All right, well, good morning, active traders, and welcome to today's live broadcast. I'm Ken Calhoun from TradeMastery.com, teaching tens of thousands of traders over the last 21 years. I hope that y'all are doing well in the markets as they continue to go up. Despite all the bad news out there, markets continue to be strong. Electric vehicles and, curiously enough, cannabis stocks yesterday were especially strong. So we'll look at those and more coming up in today's session. Let me ask a quick question. How many of you are day traders? Like me, you like to day trade a lot. How many of you are swing traders? Or how many of you dabble in both? If you would, type in either the letter or the word day or swing or both. Let me know, and I'll adapt the coverage of today's presentation based on what you all tell me. In professional training, that's called audience analysis. You want to make sure you're talking to the right crowd. If you're all swing traders, you don't want to hear me just talk about day trading, and vice versa. Looks like mostly both. And I don't have any day traders only. It looks like a lot of both and swing. Okay, it's good to know. Thanks, Steve, Greg, Renos, Frenchie. Hey, Frenchie. Hey, Ben. Hey, Damon. Good to know. Hey, Scott. Hey, scrolling by. Okay, I won't try and read them all off. Okay, well, thanks. Okay, well, just a quick note that I have relaunched the live trading room, the Trading the Open, at my Trade Mastery site, and you're certainly welcome to take a look at the upgraded page. Put a lot of new information on it and good tips and strategies. And as we're doing today, it's now in Zoom instead of GoToWebinar. So we've permanently migrated, as of this past week, from all of our webinars from GoToWebinar to Zoom. So now we're on the Zoom platform. Let me ask you all a question. I asked my live room members, I had so many new members that joined up this last week or so. Is the audio and the video clearer and sharper in Zoom? Or not as, is it better or not as good as GoToWebinar? I'm just curious. Is the audio and the visual quality better than or not as good as GoToWebinar? Let me know. And we're going to go ahead and get underway with our technical analysis here in just a second. But let me know if it's, everyone's saying better. Okay, better, much better, sharper, easier to read, clearer. Someone's saying it's the same. Hey, James. Much better. Thanks, Manoj. Okay, well, good to hear it. One reason why we switched over to the Zoom platform. So anyway, let's take a look at broad markets. The S&P is up, obviously. Not much to say about it, except hey, we'll go long if it breaks out new highs over the 47.40 up there, or short if we get under the 46.20. We did do a pullback, though. And as CNBC correctly put on their website, it's the first down week in 6 weeks. So last week was a bearish week, although slightly, it's a declining week. So even though we're in a wild runaway bull market, last week was a down week. So bum, 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 bum. Get ready for that. If we want to cash in with our trades, we want to make sure that we are focused on the right side of the market and the right type of instruments that are moving. So let's take a look at things. One thing is I always want to pay a keen eye on is the VIX. It's currently still in kind of bullish territory. Keep an eye on the VIX at 18, right? 18 is a key threshold area. So if the VIX stays under 20, we still have a modest long bias. It's an inversely related to the market. So if the VIX gets back over 18, remember to do not, or at least I'm not going to do a lot of swing trading. I'll be doing mostly day trading. If the VIX flips bearish, which for the market would mean a recovery of the 18-19, and particularly if it gets over 20. Now, in terms of broad markets, you can see gold has been going up, obviously, the last several weeks, a couple of months. A nice breakout here up to the 35 in the GDX. I like to trade, this is the one I trade, is GDX. And you can see gold has been on an uptrend, but not a real strong one. We do have kind of an inverse head and shoulders here, kind of left shoulder, the head, and the right shoulder. That's called an inverse head and shoulder. It looks like a small letter U, then a big letter U or V, and then another small letter U. And that's why you can see here. That is a bullish reversal pattern with the neckline right here at the moving average near 34. What about oil? Well, oil's been, as you know from the prices at the gas pumps, right? Oil's been a real pain in our collective butt. Way up here, the UCO up just near 94 or so. The one thing that I am trading to the long side, and I sent out an email about it, is I was going to trade UVXY, but it still looks like it's misbehaving. But gold is starting to behave. So KOLD is one that I cover in the live room daily for our members, and we'll see from a swing trading perspective if it's able to climb just above 10. And that's going to be a very strong long pattern if the KOLD gets over the 10. So we're going to take a look at that as well. Now in terms of other swing trading charts, both day and swing trading charts, things like PLUG, our electric vehicle sector has been very strong. So plug, EVGO, right? Look at that. It doubled in just a week from 10 to nearly 20. So a doubling in EVGO, that's better for day trading than swing trading because of volatility. And Ford Motor Company, for whom I used to work back in the old days, back in the early 90s. Ford, I've been looking to see if it's able to get and stay over 20. It did get over 20, but it quickly fell back down to earth. So I'm going to buy some Ford if it gets over, say, 20.7 and takes out a new one-year high. So Ford Motor, a really good EV play. It may just be early. I think it's still early in the stage of a breakout. What do you guys think? How many of you are... I am pro Ford. I think Ford is going to be a good EV play, and it's got a long ways to run. Of course, there's that new Rivian IPO that just came out, and it's we were covering that for our members yesterday and the day before too. But Ford, I think, has a lot of upside, and it's a really good strong chart the last several months, right? So going from 13 to 20. I've been alerting my members since back right over 10 a long time ago, and then again over the 15. And now we're up to the 20, so we'll see where it goes from here. Other good swing trading charts before we switch channels to day trading. IGT looks good up here. If it takes out new highs, got a shooting star with resistance at 33. And just reminds me, I will be doing a premium event with my colleague Steve Nissen. We're tentatively scheduled for December 2nd, so keep that on your radar. Anyway, bearish shooting star up there. That's this candle right there. The neat thing that I like about candles is that they usually work. They usually do a really good job of identifying reversals. Now, I have not learned all the different dozens of patterns. I just use hammers, shooting stars, bullish and bearish engulfing, sequential large candles or small candles, and doji. And that's kind of it. The range of the candle, and that's kind of what I look at. But from classic candlestick standpoint, you can see that's obviously a shooting star. And that was a sell signal generated just under 32 there. Now, it would be a long signal if we get back over the 33, but it would be a do not touch it until it gets over 33. So just a bearish reversal, but if it does keep going up, it went 20 to 33, so a good run while it lasted. APA also another, it's an oil play, and it's currently up near 30. It's a good directional uptrend, and it may well continue up if oil goes up. Consumer staples like Costco, I've been telling you guys here for the last 6 months, Costco's along, right? Ever since it was, I think, 405 or 407. Now it's up at 510, so what a run in Costco. And the other swing trading chart that I'm keen on is Pfizer. Because of the COVID pill that came out, and obviously it led to the gap up, and it gapped to 46.50 and ran all up here to 50.50. And again, I'm going to wait for it to take out the one-year high. I'm going to wait for it to get over 53 or so before I buy me some Pfizer, because we're right below resistance. That's usually a really dumb time to buy. You don't want to buy right under resistance because that's the sell target for everyone who's in from 45, 43, 44. They're happy to sell up at 51. So I don't want to buy there. But if we do break and hold above that 52.5 or 52 or so whole number resistance area up here, I'm going to look at Pfizer. Now let's switch gears for just a second, or for the rest of the broadcast, I should say, and take a look at our charts. My favorite chart yesterday was ACB, and I made money day trading it, and I also put on a swing trade. Let's get that chart pulled up for you. It's Cannabis's world yesterday, right? I don't know why all the cannabis stocks ran. I would hazard a guess there was some positive regulatory news impacting the entire industry, because all the pot stocks that I've traded and I'm currently trading are going up nicely. So ACB, I sold the 838 on the pullback there. I was in, I think it was from like I think I was in from 805, and then I sold up here at the 838. So I didn't catch the tail end of the run, but that's good for a day trade. Whenever you see a move like 45-degree angle that runs all day long and then it starts to sell off, that's usually a good place to sell, because frequently it'll go back to the mean reversion 50% range, or even get back to where it started the day off at. So it doesn't do me any good as a trader if I buy at 8 and sell at 8, but buying at 8 and selling near 8.40, yeah, that was pretty good. So I did buy some more into the close though, because I think I bought it aftermarket. I bought some of this. I bought some Canopy Growth, a little Tilray, and some Sundial. Those are the 4 cannabis stocks. And let's take a look at them today, and we'll look at other charts in just a minute. So this one is Aurora Cannabis, ACB. Canopy Growth, one of the blue chip, if you will, cannabis stocks. One that Kramer had mentioned, I forgot the ticker. I think it was IIF something. Does anyone remember? It's expensive though. It's like $300, but it's got like the best 1-year chart I've seen in or one of the better, well, at least 6 months chart I've seen ever. I think it's IITF or IIFT, something like that. I forgot the name of it, but apparently it's in that same industry, and I just heard about it from him for the first time ever. I think it was yesterday or the day before, but anyway, Canopy Growth I like a lot. It went all the way from 14 to over 15, and that's a lot of institutional buying. One way that you can tell that big money players are in an instrument is when it goes up steadily and slowly, strongly, all day long, without the random haphazard up and down chop that you see in the cheap, under $10 junk stocks that the kids like to video game trade. Professional traders, we like charts that have nice, steady, consistent moves because why? You can scale in more easily than something that goes up and down all over the place. So we want charts that are steady runners, and you can just incrementally build the trade from there. Oh, thanks, Stephen. IIPR. Thank you, sir. I will add that to the list. Because look at this 1-year chart. I was blown away. I never even heard of it until like yesterday or the day before, whenever Kramer, Mr. Booyah, mentioned it. And he said this is the only one that he really likes. The volume's junk though, but look at the 1-year chart. So that's not suitable for me because it's too thinly traded. But that's like one of the best, like Costco, that's one of the better 1-year charts you'll ever see. And look at that. It's wonderful, right? From 180 to 280 in a year. It's been a nice steady runner all year long, except for a pull. The September sell-off got it to a little bit and pulled back, and then it resumed its upward march with that's called what? Name that candle. Tick tock, tick tock. Johnny, tell them what they've won. That's called a hammer. It's hammer time. Ba-da-ba-da. It is a hammer, and boom, off to the races she goes. So that's IIPR, and thanks. That's what I was thinking. I hit Control S. So I can save that one in the list as well. Anyway, that's IIPR. I know Kramer had also mentioned growth generation. I think GRWG has been a good play a long time ago, and it's a reasonably good chart as well. Now, for those of you like the cheapies, now I got stopped out on this punk. I bought it at 88 and got stopped out at 82. I hate when that happens, right? I used just the wrong entry and the wrong exit. Into every trader's life, sometimes you're going to screw up and make bad trades. And that was one I bought I gleefully pronounce my bad trades as well. I don't hide anything. I'm very open and honest. I bought 88, sold 82. I'm not proud of it, but hey, it is what it is. I used whatever it was, 6 cent trailing stop. If I just used 9 cents, it would have stayed alive. But you can't coulda, woulda, shoulda when it comes to trading, right? There's always going to be missed opportunities and bad trades as well as good trades. So anyway, that one was a cluster blank. It didn't work out. But my the ACB one did work out, so that's good. I made more in the ACB, so it's all green. Anyway, this was down here at 70 cents. Then it gapped up pre-market all the way to just under $1. I want to scale into this guy over new highs, and the specific price I gave to my members in the live room. So that's one. And the last but not least is of the 4 pot stocks that I'm currently trading is Tilray. So I only bought under a few $1,000s worth, maybe a few $100s worth of each of these, and that's how I start off with, maybe 50, I forgot how many shares, but under $1,000 worth of each. But I did buy a little bit of Tilray, Canopy Growth, Sundial, and ACB yesterday at the end of the day because I think they may be good for more. So the cannabis stocks are particularly strong. All right, let's see what else is out there from yesterday. Some good strong charts. Here's one, and we've got so many smart members at my live room. This is one that one of my members had asked about, and you can see the ticker here is MP. And that's in my live Trading the Open live room. If you're not yet a member, why aren't you a member? Go ahead and join. Try it out. It's only like $47. Unlike certain other people, I don't make you spend $1,000 to try my live room. It's only $47 for a couple weeks. You can see if it's good for you. So, and we can take PayPal, which I prefer because that way if you want to cancel, you can do it on your own. But a lot of people stay around. So we take PayPal and regular Visa and MasterCard. And that's the Trading the Open live room. I've ran it for the last 21 years. Tens of thousands, I don't know how many thousands exactly, but at least 10,000 trained over the last 20 odd years. So, and I do a lot of live trading in front of people, and I tell people exactly where, at least I'll be looking to enter, and also real time where to exit ahead of time. So anyway, that's the live room at Trading the Open. Anyway, the reason I brought that up was one of my room members had mentioned this one, MP, and I got a lot of smart members, and they frequently mention great charts. So traders like Mick and Roger and Wendy and Tom and so many others, and Barry. Anyway, MP's up. Freeport was up a bit too. Reopening plays, right? We want to think about raw materials like steel and copper, and obviously Freeport's it was on a big run on Thursday. Not so much yesterday. It just kind of poked its head right up there near 41.5, 41.6 and pulled back. But it had a big open range breakout on Thursday. Now this is a 2-day chart. The reason I use 2-day charts is because it's a very valuable, I've done over 20 years. And it works great for me because I can see the exact trading range and key support resistance levels. And if it's going to run, about how far it's going to run. And visually as a pattern day trader, I'm looking to capitalize on repeatable patterns. Now, yesterday didn't repeat Thursday, unfortunately, but at least we know what the range is on a typical breakout day. And you can see all the way 38.60 to 40.60. So it had a $2 run on Thursday. So I put it on a radar. Trader asked about AMC. It ran a little bit, but it stopped us out. We called it a 40.40, but we got back out at the 40. So a little haircut there. Not too severe, but it just kind of chopped around sideways. But it looked good on Thursday, right? QS, another strong Thursday, weak Friday. Ditto with EVGO. NEO, kind of a gap and trap, right? It gapped up, it sold down, bounced off the previous day's high region, which often occurs. In this case, the 42 whole number. We always use whole number support and resistance. Gap runner in FTCH. Looked at BLNK, RLX, and news was a big runner before. But the big winners for us were the pot stocks, Canopy Growth and ACB, notably strong. And I was trading AC. I was day ends. I'm swing trading all 4 of the ones now, but I was day trading ACB successfully yesterday. So what I like about it's a nice 45-degree angle, and those are the kind of charts we cover in the live room. All right, so anyway, I think, CLFD, oh, thanks. The one I was thinking of is GRWG, Growth Generation. That's the, what did he say? Something like that. It's the Lowe's, the Home Depot for the cannabis industry. So anyway, for whatever reason, all the pot stocks are really hot. So that's my tip of the week, and that's how I'm betting. That's how I'm trading is swing trade strength in cannabis stocks and electric vehicle plays like Ford, and the others, the plug and whatever else is out there in that space. So with that, I think we're going to go ahead and wrap up. I'm not going to stick around for much longer. I don't have anything else to say. So I wanted to wish you all the best and do trades like Tom Sosnov brilliantly says, trade small, trade often. And be sure to catch Tom's, what's it called, First Call or something, his Sunday evening show on YouTube. It's streaming. And of course, I've got my videos that I post occasionally on my on my YouTube channel as well. So thank you so much for being here. It's been a great week. We've got an exciting end of the year coming up, I'm sure, right? We've got really good volatility. Now, if the market keeps going up, things like energy, electric vehicle plays, lately, wow, big turnout. Wow, I have so many people today. Welcome to Zoom. Welcome to Zoom. Reminds me of Zool from Ghostbusters. Dum bum bum dum dum. Zool. Anyway. Oh, thanks, great as always. Hey, thanks, Jim. Appreciate it, man. I think that's about it. I don't see any other questions. All right, good stuff. Oh, hey, congratulations. Heidi said she got in at 14 on Ford. Okay, great. Well, that's great. You're up at 20, so that's a huge ROI. So well done. But where would you trail a stop? Personally, I'm not long Ford right now, but if I were in Ford, I'd sell it off at lost, say, 18 or so for a swing trade. Somewhere up in there in the high teens. I'd sell 18. If I was in large size, I'd scale out anywhere near 18. So, and scale in over the 21 or so. So I'm going to look for a breakout over 21 and Ford if it keeps going up. So anyway, we are at a close. Our time is done. Thank you for being here. I do appreciate it. And I'm going to wrap up a bit early unless there's any other questions. Let's see. Hey, friendship, what about lithium for electric car batteries? Yeah, some of the materials and things like uranium. I think there's a ticker UUU. Crypto has been relatively strong lately as well with Marathon, MARA, BTBT, and Riot, RIOT, and Coinbase, COIN. So that's another industry group to keep an eye on. I didn't cover it today, but pot stocks, crypto, electric vehicles, and energy all look to be relatively strong. I would give least preference to energy. I still like EVs. I think electric vehicles going to be hot. And for whatever reason, cannabis stocks really lit up on Friday, so they may be strong into the upcoming week ahead as well. So for more, I do hope that I've earned your trust or at least your interest and enough to try out my live room. It's only $47 for 2 weeks with me in the Zoom platform, and we're there every day from 8:30 till at least 10:30 or 11. Usually 8:30 to 10:30 for sure, and frequently as late as 11 for the live room as well. So we cover whatever's hot, great gaps and breakouts each day, and answer questions and make it a very friendly, professional, kind of a step-by-step coaching experience. One of the things I know, I've got a lot of new members who are relatively new to intraday trading as well. What we do not do, the thing that we do not do, the thing that I'm very adamant against is things like scalping thousands of shares of under $10 low float stocks. That is risky, that is gambling, that is for, let's say, less experienced people. The young kids do that. Day trading should not be like gambling or video gaming. So you should not be trading thousands of shares of a $3 stock just because it ran and it's going to go another 5 cents. That would be a really stupid way to day trade. Professionals like things like what I was day trading yesterday, ACB, successfully. Things that they're not expensive. I don't trade Apple or stuff at 80 or 100, $200 a share, but they're not the under $10 junk stocks either. We do occasionally cover, as you can see, a few of them that are under 10, like ACB was under 10 because it was strong, right? And Sundial because of the size of the gap in the volume. But 90% of what we cover is usually 15 or 20 or is at the most 30 or $40 a share. Most of what we cover is around $20 a share, so not too expensive, and we've got really good volatility. So if you're new to trading and you are kind of put off, as I am, by the prospect of having to trade like 5,000 shares of a $2 stock and scalping with hotkeys and all that kind of foolishness, that scalping approach is the single way that you can blow up your account faster than anything else. So I inherit a lot of traders from these wannabe places that pay off people for testimonials and try and pretend that they're making $100,000 in a day and all that kind of foolishness. If it sounds too good to be true, it is. And the Federal Trade Commission will ensure, hopefully they'll crack down on the dishonest chat room operators. But anyway, so I inherit a lot of people that run away from those bad places and realize, hey, something's not right with those places that scalp thousands of shares of cheap under $10 stocks. That's the wrong way to day trade, right? The right way to day trade is charts that have high volume, high volatility, and consistency. Not the pop and drop, $3 low float junk stocks. That is a foolish, horrible way to day trade. I've been one of the world's top day trading educators since 1999, award-winning and all that kind of stuff, and a money show speaker and stocks and commodities columnist and the rest of it. You have my word. It's very important to find consistent patterns with charts that you do not have to trade thousands of shares instantly like a hotkey video gamer. That's a stupid way to day trade. And if you're swing trading, you also want to be careful that you're trading charts that have relatively consistent trends and relatively wide range so that the risk-reward numbers make sense. So you don't want to trade a chart that, for example, is the $20 to $25 range or something. I like charts that have like a $20 to $35 range so that I can have a better shot at making some money on a swing trade if it does go up consistently for a week or two. So that and much more is what I cover in my live room at trademastery.com, the Trading the Open live room. Or if you, I still have my old domain. You can type in tradingtheopen.com. I used to run the website over there, but now I've folded it under the Trade Mastery umbrella. You can still type in tradingtheopen.com, and that'll take you to this page, trademastery.com/live. It's the place to be where smart traders hang out. So if you're fed up with the misleading, frustrating shenanigans you may have seen elsewhere, give me a shot, and I promise to do my best to help you. So do take care. Trade smart out there. And trade, like Sosnoff says, and he's exactly right, trade small, trade often, right? A final thought, and I was pleased to, I always like to ask, Tom was my keynote speaker last month at my summit, and I always like to ask Sosnoff like one smart question here, because he's a genius. He's totally smart. He's the sharpest guy I know out there in the industry. And the thing that I asked him was the whole thing about the use of charts versus numbers. And he said, well, you can watch the YouTube video on my channel for his reply. But basically, the thinking is you should not use charts nearly as much as you use things like directional volatility and ranges and numbers and the rest of it. Your trading should be much more numerically based. For example, for me, the purpose of a chart is to determine tradability of the instrument based on range, number one, and trend, number two. The specific little pattern, that's not as important. What counts is the thing something that's likely to make you money or not? And what's the relative strength of that chart, the directional volatility and consistency of that volatility compared to other instruments that you may want to consider trading. So trade much more like an accountant rather than a visual video game trader, and you'll probably be much better off. I always am. My biggest winning days, and you have my word on this, very important, is where I put a sequence, a ladder of 3 or 4 trades in a row designed to scale in on a sequential run up. So I'm not risking much on the front end. If it stops out, which frequently they will, I have another shot at it. So maybe I'll get a stop and a second stop. But the third one holds and it runs. And the fourth one, maybe break even. The fifth one's another win. Maybe the sixth one's a stop and the seventh one's a win. Anyway, out of all that stuff, the goal is to make a series of 3, 4, 5 trades pay off for you. And so that's why we're looking at multiple entries. We don't make it complicated. I always cover just maybe 2 or at most 3 entries for different stocks. So that way it's easy to follow. But that's one of the types of, if you're frustrated with losing with trading, I think that approach can be a big improvement, is focus much more on the risk reward and the numbers and the strength of the chart and that kind of stuff rather than isolated, hey, it's a crossover, there's a VWAP or that kind of stuff. It's much more important to be a numbers-based statistics, trade like an accountant. It's a numbers-based game and a volatility and variability game, not so much a single magic chart pattern that you buy a lot of shares of and hope it works, because that doesn't work. So hopefully I can be part of your success. I will see you in the live room at Trading the Open, my Trade Mastery live room, and you can get there by going to www.trademastery.com/live. That's about it. So I want to thank you all for your time and your attention. I hope this has been entertaining and helpful, and I hope that you can make winning trades. Keep buying, again, electric vehicle plays, cannabis plays, and energy may be strong, and crypto may be good strong. Financials are still doing pretty good, but financials and small caps have been kind of laggards compared to some of the other industry groups. So, I mean, if you're an investor, certainly places like Morgan Stanley are a great company to invest in. But for short-term trading, I think electric vehicles, cannabis, and crypto are going to be the 3 industry groups I want to focus on next week. So I'm going to say aloha, and I will see you guys in our next session. Let me stop the recording here, and I will see you guys next week. So